right, good morning. Como televoo, how are you? Jumbo, Ohio, ni hao ma. Uh-oh, didn't do up one of my buttons. Hey, good morning, everybody. Welcome to Forex.Today, the YouTube community of almost 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of trade planning. With that being said, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. My name is Wayne McDonald. I am a currency trader. I'm proud to be a currency trader. I think it's the best thing out there in the world. Whether you look at it as a means for trading or simply as a small business, this is the best there is. When I was doing Trade Non-Farm Payrolls live at FX Street on Friday for the 195th month in a row, some guy said, well, hey, Forex is good, real estate's good, but how about flipping Rolexes? And I'm like, you can't scale that, bro. You can't get big. Even if you made $1,000 a watch, you'd have to sell one watch every single day. And it's probably not that easy to sell, a $15,000 watch and make $1,000 profit. But yeah, and nor are you leveraged, nor will a bank loan you money, all that kind of stuff. And it's just like, you know what? Your best opportunity is Forex. It's a small business that's wonderfully leveraged, wonderfully taxed. No accounts receivable, no accounts payable. So I love Forex, and even as a venture capitalist and as a high-tech entrepreneur, helping high-tech startups raise money in my past life, I looked at many thousands of business plans. Nothing even comes close to the opportunity you have in front of you. So I love Forex. It's awesome. So ask questions, get involved. Let me know how I can help. That is the whole point of us being here today. Today, we're going to look at retail inventories. We're going to look at the OPEC report that came out today. I know you probably already read it, but we'll go through it anyways. Why not? There might be one or two people that haven't actually downloaded it yet, but I'm sure all of you have. So we can take a look at that briefly. We can look at the stock market. We can look at the calendar. Just let me know how I can help. With that being said, in the description below, there's more opportunities and resources for you to gather intelligence and get help. In the description below, you will see a link to my book, Strategic and Tactical Forex Trading. You will see a link to fxbootcamp.com, a community that I've been running for about 20 years. It's very expensive, $88 a year. There's a link to free training videos on the FX Bootcamp YouTube channel, on the Trader's Way YouTube channel. And then, speaking about Trader's Way, we all need a broker. I suggest you get one that's trustworthy and ethical. Trader's Way has proven that to me through their actions. Tradersway.com. Click on the, or don't click on the link. Just go to tradersway.com, whatever you feel comfortable with. Open up a demo account and give them an opportunity to earn your loyalty and respect. You'll probably find that the execution speed is fast, the spreads are narrow, the swaps are huge. Tradersway.com. And here he is, and here we shall be. By the way, YouTube says no data. Is this streaming? Sometimes it gives errors. It looks like it's streaming. Yeah, I think we're streaming. YouTube is saying no data, but I think we're streaming. So anyways, yeah, welcome. Good to see you. I hope everything's well. One of the things I've been talking about in the day trading group, I don't know, the last week and a half, 2 weeks, one of the things we're looking at is inventories on the retail side. And I said, I have some data, but not a great, swath of data. One of them, I believe I looked at Target inventories, right? Inventories for Target. And it was up, I think I said significantly. But then this happened today. I was outside smoking a cohiba and drinking cappuccino. That's unusual. Anyways, so this is my phone. Look, 27%. Look, 837. You know, it's 9:01. So this is very recent. And I'm watching Bloomberg. This is Bloomberg. I guess I should cite my sources. And they came up with this. Bed Bath & Beyond inventories up 15%. Walmart up 32%. Gap up 34%. Target up 43%. AEO, which I don't know. What is that? That's, I think, the male lingerie company. I don't know. Up 46%. And Big Lots up 49%. Holy smokes. And today is Amazon Save Amazon Day. So where they're going to dump all their inventory. I forget what they call it. What is it? Prime Day? Anyways, holy smokes, huh? Now contrast this with American Airlines, who reported, was it yesterday? I get my days mixed up. As a foreign exchange trader, I never know what day it is. I'm always trading a day ahead. Anyways, revenue, profits, I think it was profits for American Airlines last quarter were up 12%. Up 12%. Okay? American Eagle Outfitters. Thank you, Johnny. See, Johnny's our style guy. Appreciate that. So that's interesting. That doesn't bode well. What does that mean? Well, inventories are high. They're going to want to get rid of them. That means things are going to go on sale, which is what? Prices falling. And what? Is that inflationary or deflationary? Deflation. So when you look at oil at $99 a barrel, and you look at copper, what was it? I can't remember the numbers. Way down, anyways. That's signs of deflation. That's the United States pricing in a U.S. recession created by the 75 basis point hike that the Fed did. Now, if you go back and look at your fundamental data, look at everything from the day the Fed jacked up interest rates by 75 basis points and announced that they'll probably do it again. And at that point, prices started coming down. What is that? That's demand destruction. That's a recession. The thing is it really that bad? And is the Fed really going to stay that aggressive? Well, that's what everyone is answering. Okay. Like I said earlier today, and I know you, that's I got to go to a download link. I have the actual report. This is the actual OPEC report. Okay, came out today. In this, check it out. The outlook for the oil market next year. Oh my God, you haven't read this yet? Huh? For shame, man. For shame. Let me get you a clicky. There's your clicky. Okay. So anyways, yeah, man. You might want to read this. This tells you the future. I also have the spreadsheets and things like, rig counts. This is a quick static look on production, and can we produce more, and what do we have, right, and all that kind of stuff. The United States, before COVID, we had almost 950 rigs, and right now we only got 740 up and running. It's better than before. Look at the big jump. Okay, but you can see, right? Even in, let's say, 60 to 90 days, it takes a while to get these things up and running. Okay, Canada has more than they used to. So thank you, Canada. I appreciate you, eh? Oh, Mexico, they got up and running. That's good. They have more up and running. But total, look at the total. 935, but we used to have well over 1,100. We're right? We're hundreds short yet. Hundreds short. We could use a couple hundred more just to get back to where we were. So what does that tell you about productivity of producing oil? Okay. And then when you throw in Norway, UK, and Europe, and OECD, Asia, you can see it's still a couple hundred short, which means only America could save Europe or save itself, however you want to look at it. Because when it comes to nat gas, it's not that easy to get the gas to Europe, and Europe doesn't need oil, it needs gas. But anyways, when we're talking about oil and gasoline prices and all that kind of stuff. Now, by the way, gasoline prices are down, what is it, $1? Right? $1 a gallon in the United States? That's cool, but why is that? Well, refineries already made the gasoline, I should say, right? The petrol. A while ago, right? But the thing is, what do we do when we run out of those supplies? Can we, maybe, but anyways, we'll have to pay attention. This is on the production side. How about Venezuela? Venezuela used to have 25 rigs going back before COVID, and now 3. 3. I'm thinking it might be time to finally, and I've been saying this for many years, finally maybe raise some money, go to Venezuela and buy some beachfront property. Someone's going to have to come in and get that oil. We need that rig count up. Venezuela apparently can't do it on their own. So who can do it? Canada, by the way. Canadians will go into Venezuela and help. Why? That oil is nothing like the oil in Texas and Oklahoma and Pennsylvania. That oil is very, very similar to the heavy oil in northern Canada. So here's what I'm saying, You get some Canadian boys, and you say, hey, how would you like to live on a warm tropical beach instead of being way up north in the freezing frickin' cold? They're like, hey, it's a good sales pitch, right? So you buy a building right on the beach with palm trees. You'll probably have to put the palm trees in. Beautiful, right? Beautiful apartment building, 300-400 doors on this thing. And you rent it out to a bunch of Canadian oil experts, huh? Okay. So anyways, when you look at the entire world, we have less than 1,500, and we should have almost 1,800. So again, about 250. So what does this tell us? America actually is the farthest behind. There's something going on in America to make it way behind where it should be. Could be things like the government calling the American oil companies greedy and punishing them for high energy prices, where I don't think they set the prices. So why would you want to invest if your own government is calling you a thief? The second thing is, did the American government, care when Exxon was losing $20 billion a quarter because oil was free? No. The other interesting thing, and I don't know if this is good or bad, but it is part of this number, is ESG. And there's a lot of lobbies in the government and all that kind of stuff. And so what it turns out to be is it's really expensive in America relative to maybe some other countries, and even unfavorable. There are a lot of people that say we should get rid of that industry. And I'm not saying that's good or bad. I'm just saying, well, when you do that, you will get higher prices. And you say, well, why do you get higher prices? Well, Canada's back, has more than before. Mexico has more than before. And the United States is hundreds of rigs behind. And when you look at the rest of the world, the rest of the entire world, we're basically short those 200 rigs. Okay? Right. So Milo says because there's, I think you're talking about why didn't the government care when those oil companies were losing. Well, the point I'm trying to make is the oil market is in its own nature inherently volatile. So oil companies know that there will be times when profits are high, but don't worry about it. There will be times when profits are negative, and you got to have that rainy day fund to balance everything out. These are not like 2-year projects. Many of these projects are lifetime projects. The one example I give in the oil class that I'm leading is a well that was drilled 111 years ago in Iran. 111 years ago. And it's still producing today. Many rigs that you see in these numbers, they might actually only produce a few barrels a day. Okay, the big ones maybe 100 barrels a day, maybe 1,000 barrels a day. The 111-year-old well in Iran produces 100,000 barrels a day, every day for 111 years. Pretty amazing, right? How long ago was that paid for? Well, the funny thing is that the British paid for it. And then the British were kicked out. And now, right? So that was a free well, and it keeps producing every day. So why worry about efficiency, productivity, maximizing everything? Who cares? It's free money every day. All right. So if you go through this report, it's pretty interesting. It goes through world demand all the way out to the end of next year. Country by country by country, so on and so forth. Okay, supply side, world demand. Okay. Yada, yada, yada. Huh? That's some pretty nice, right? That's some pretty nice information. Global investor wants to scalp some Kiwi on the interest rate decision tonight. Cool. We have a race, don't we? Australia went from never going to raise interest rates to suddenly raising interest rates. And New Zealand was ahead of the game. They raised, they paused, they raised, they paused, and now they're way behind their cousin. So maybe they got to speed things up. One of the things to worry about, and again, I talked about this several days ago in the day trading group, or maybe it was a swing trading group. I don't remember. That would have been last week. We got to worry about COVID cases, and Shanghai's in trouble again. Macau is shut down for months, and Shanghai might be in trouble again. All right, we've had, 4 or 5 days now in a row of over 60 cases. It doesn't sound like a lot to me. But the thing is, if they lock down, basically, if China locks down again, it's going to destroy demand for everything. Lucas says, hey, Hungary's raising interest rates 3rd time in 2 weeks by a lot. Well, they're competing. Emerging markets, frontier markets, they're all getting crushed by the strong dollar, and they have to compete for the money flow. Okay? So emerging markets and frontier markets are competing with each other, and yeah, the one with the highest interest rate will probably get some money So Hungary, what, has to compete with what? The Polish zloty? Or the Czech crown, right? Those would be probably the three big competitors. Okay. And New Zealand has to compete with Australia. So here's all the current long-term trends, but Euro's at parity at the moment, so we'll have to take a look at that. Looking at this a little closer, yen has been stable, dollar strong but hiccuping as euro is tickling parity. There's a reasonable plausibility of a pop suddenly. Oops, that should be on hourly. Okay, everyone's worried about it, or not just worried, but even trading the potential for a pop at parity. Hour. Okay, Aussie, fairly strong. CAD giving some back. That's probably the drop in oil that we had earlier today. Pound trying to recover some. Kiwi stabilizing before the interest rate. Swissy giving some back. So this looks like a little bit of a pause, a little bit of hesitation, everybody holding their breath at parity. So let's go take a look around the world and see how we're doing. Okay, I'm gonna move this, my stop now. I'm gonna lock in, well, that's 100 pips. I guess I'll lock in 100 pips. And say this has to hold or I'm out. Okay, so that's our euro dollar, Eurity at parity, or testing parity is what I'm looking at. Okay, this line in the sand that I'm using as a, well, in this case, the sell position, that's actually a bank that bought. So a big bank bought right in there. And I'm a seller. Well, actually, I'm not a seller. I sold up here. So now, for every pip this drops, they're losing money, and I'm at worst case scenario 100 pips. Okay, and now what? Now what? Yeah, well, that's the next big question. And right now, I have a take profit down at around 98. Some people are talking 95, but that would be further out, eh? So we'll see. We'll see how we go around. Even if we're going to go down to 98, there's a possibility of a big bounce and then a drop. Okay? Okay? Bada bing, bada boom. Bada bing, bada boom. So we'll see how that goes. That's got to work today or I'm out. Let's go to a smaller time frame. And looking at Aussie dollar versus USD, that's kind of the line in the sand. And I'll lock in 75 pips profit. And that's a mediocre exit because it'll probably come up, knock me out, and then come back down. But I'm worried about, again, a big euro bounce would produce a big Aussie up. Okay, so a big pop here is worrisome and could be related to the interest rate decision later today. But again, I'm much more worried about the euro dollar pop on parity, the parity pop. New Zealand, okay, you can see the trade plan from last night in the day trading group. Actually, let me get my drawing to Epic. Okay, cool. You can see we were down and I thought up, hit that 21 and then down. It still seems pretty reasonable if I zoom in now. Okay, you can see I'm guessing on where it's going to be and all that kind of stuff. So we'll see. We'll see. It is flattening out, a little worrisome, but if it rolls over, it'll come down. So maybe I'll lock in some profit here where's 50? See, I can't even lock in 50. 50's there. Shoot. Well, I'll leave it. Okay. I'll leave it. 25 pips is not enough. Okay. Papa needs more. I'm not going to take a trade for stupid 25 pips. What am I, afraid? So, not enough money in it yet to lock in anything. Okay. Okay. And piggy. Okay. A little bit of a retracement. This makes sense. There's the old line. Let's drag this. I want to keep below there. So let's move this stop. I will lock in 100 pips there. I could probably lock in more, 125. Where's the other one? 100. We'll see. Yeah, I guess I could always re-enter, huh? So 125 is about there. That's okay. It's not the greatest spot, but you know what? Money in the bank is money in the bank, huh? All right, cool. So continuation there should happen fundamentally, but then again, psychologically, or you could even argue technically, again, if there's a bounce in euro dollar up today, then that's going to pop up, and you know, I'll take some profit. Okay, I think there could be some more down. My target here is 17.5, and we're at, you know, so there's a pretty decent likelihood of another 100 pips down. So I kind of want to stay in this, but look, if it bounces today because of that parity, give me my money, huh? Give me my money. Cool. So those are dollar pairs. Let's see what's on your mind. I'll end the poll. Thank you for participating in the poll. I appreciate that. Okay. Again, split on euro and pound. Good job. I like that. Some are on Aussie, so that's more of a risk on. Well, actually, you might be selling Aussie, right? And then some CAD. Gotcha. So let's take a look at commodities. Oil was down, but my biggest concern last night was Bitcoin. I think we're in a dangerous situation here, because if we breach lower than this 20, I'm worried that it's a long ways down, is all I'm saying. Okay? So looking at the short run here, let me open my indicator. Biased pivots. True. I want my midpoint. True. Okay, great. Let me open this up and get closer. Okay. All right. You can see on a daily, we have kicked off this 21. It's very disconcerting. Okay. Because if this continues, we don't know, it's only technical, but technically speaking, the conservative target is 12,000. The aggressive target, okay, is 10,000. $9,646.85. Okay? And boy, would that cause some problems. Now you're like, well, Wayne, I don't trade crypto, right? Well, that's a big risk-off move. And up until now, Bitcoin's been pretty good at showing us how other markets are moving. It's a good indicator of risk-off. And a big move down, a 50% drop in Bitcoin, would probably hurt a lot of funds that have put some money into crypto, not just crypto funds, but there are a lot of other institutional players that were sold this idea, like, you need to be in some crypto. So they bought some crypto at, 30, 40, 50, 60,000. And every time it drops, it's hurting them. At some point, they may have to sell some good assets to pay for the pain. And that means maybe unload some stock and all that kind of stuff, or unload some bonds. And, well, that'll impact everybody. Plus, if that sours the mood and people say, okay, this is going to, this is another indication we're going into a big recession in the next 12 months, then that's risk off for everything. Holy smokes, huh? So that's pretty important. So I mark the lines based on that. Oops. I mark the lines and I say, this is an important price. This is an important price. And after that, God save us all. One other piece of information, I don't know if this is important or not, but I received some Bitcoin yesterday afternoon. It took 12 hours to confirm that transaction. So what happens is Bitcoin is sent or received, and then miners come in and they confirm the blockchain. That's what mining actually does. And for that, they get some love. They get a little commission, right? That's how miners make money. And so miners have to come in and confirm all the transactions. Usually this process takes 20 to 30 minutes to get enough miners to confirm. Therefore, everyone's got the same ledger. And they're like, yep, that's right. Bitcoin went from party A to party B. It's got to be written on the blockchain, confirmed, 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 confirmed. Yep. And now the blockchain's been updated. That asset went from party A to party B. And now everybody in the world knows that party B has it and party A does not have it. That's kind of how the whole thing works. It's an open ledger. Usually takes 20 minutes, maybe half an hour, depending on how much you're going to pay to entice a block, to be confirmed. 12 hours. So what does that mean? I don't know. Are the miners gone? Is it liquidity? Is it something else? Is it broken? Have prices fallen so much that the industry doesn't work anymore or is struggling to work? And is that good for the crypto industry? Is it bad? Is it a warning sign? Is it a fluke of nature? Did something else go wrong? I don't know. But that, that's never happened to me before. And I don't know if any of you guys are experiencing that or not. "20 minutes versus 12 hours is a lot. Okay? Is a lot. Okay? Okay? A lot. Those 12 hours cost me I think it was about $750. Holy smokes, eh? Golly, gee whiz, Batman. So I got some concerns. Is it broken? I don't know. Maybe I'm freaking out over nothing, huh? But that's never happened to me before. Okay? 12 hours for Bitcoin. Wow. So I'm kind of worried that this is just like chow. Okay? I hope not, honestly. I hope not. But is a Bitcoin worth 20,000 or 10,000? What's the difference? It's still a Bitcoin, right? So, well, it's worth 10,000 or maybe even less if the system doesn't work anymore, right? Like, for example, I don't know if this is a good example. Have you ever whipped out your phone and tried to get an Uber and you wait 15 minutes and they're like, oh, your Uber ride's on the way. And then the driver cancels. And then it says searching for a new driver. And then you find that one. And then he's like, yeah, it'll be half an hour before I can pick you up. And you're like, a half an hour? What do? Try Lyft. You know, and I've actually done this one time, and it was on 4th of July, Boston Commons. Just watched all the fireworks. Couldn't get an Uber. Tried Lyft. Couldn't get Lyft. Talked to my buddy. Hey, can you get a ride? And he's like, no, I tried Lyft, and now I'm trying Uber. I'm like, well, I did it the reverse way. And they're like, we can't get drivers. And we're standing there on the corner. If you know the area in the theater district, kind of near the Ritz-Carlton there. And we're just standing on the corner. And then I realized there's a taxi in front of me, just sitting there empty. And I'm like, hey, man, are you running? And he's like, yeah. Everyone out, there's hundreds of people all around. When you look around, everyone's got their phones because they're trying to get an Uber or Lyft. I'm like, hey, can you take us to Cambridge? He's like, yeah, sure. I'm like, what is it, $2,000 to get to Cambridge? And he's like, no, it'll be, I don't know, $25 or something. I'm like, are you sure? $25? Then we get there, it's 100. And you're like, no, about $25. I'm like, shoot. So we all jump in and off we go. Or we kind of go back to Swift. if Bitcoin breaks, I don't know. I hope not. Anyways. Okay. Forex Zoomer says, yeah, if Bitcoin goes down in electricity, right? The miners, right. And that's my point. So if you're paying more for electricity and you're getting less love from confirming the blockchain, because remember, you get a piece of the puzzle, the piece of the pie, you get a piece of the Bitcoin to confirm the blockchain. But if that piece is less incentive than your cost, then it's basic microeconomics, right? Okay? So demand might be high, but this isn't supply we're talking about. We're talking about marginal cost. So if demand will pay here, but your cost is here. Uh-oh, spaghetti-o, it don't work. Okay? If your marginal cost is higher than your compensation, you just don't. You just don't. Anyways, interesting, huh? Interesting. Okay. How about this? Let me reverse this. I want to show you how your point of view is important. Okay. I wanted to buy all this. I haven't had any opportunities. If you were a bear, you put this to bearish mode, right? Bearish mode. You only want to look at bearish opportunities for day trading. And check this out. Sell zone for Sunday, Monday. Sell zone. Okay. And then here's tomorrow's sell zone. So this is the Monday, Tuesday, Wednesday. Holy smokes, huh? So technicians would probably say something like that. It's nice to have good tools, huh? There's your sell. There's your sell. And there's tomorrow's sell zone. Johnny says, is 99? Well, that would be a guess. Is that the line in the sand? Well, we want to confirm that with technical analysis, right? So you could say this is an interesting price. I agree with you. The best opportunity is to confirm a bottom and then get a higher high and then get a higher low. So a lower low is not a bottom. Okay, right? This is not a bottom, and this is not a bottom. Now, you could say, well, this is an interesting price for a bottom to form, and I'm like, oh, yeah, I got you. I agree with that. Okay? But we want even a higher low is a legitimate, right? And then higher high creates a higher low. So it could be, but you go first. Okay? And so you can see how this worked really well. Higher high, higher low, and then failure to make a higher high, and then all of a sudden a change in direction, right? So we'll see. Okay? So again, risk off would bring all this down. Recession in Europe brings this down. Recession in the United States and Canada brings this down. Recession in Australia and New Zealand brings this down. Recession in China brings this down. But nonetheless, we have low inventories. When it comes to gas in Europe, okay, we're at about 60%, and the EU wants this to 80%. Okay, what does this mean to a Forex trader? Okay, we're talking about gas, not gasoline, but gas, natural gas. Their inventories their levels are at 60% of capacity. They want it to be 80%. Put this into a trade. Tell me, talk to me, Goose. No, Jim, he's looking at the chat under my webcam instead of looking the chat on YouTube. Okay. Anyways. Underpriced. Well, but that doesn't tell us. Give me a trade. Turn it into a trade. Yeah, Forex Zoomer, you should just use the chat on YouTube. That's just there to document that there are people chatting, but it's not supposed to be your primary method for participating. That's an archive. Okay. All right, so string this together. Come on. First of all, you should know this stuff, and this stuff. Wow, look at that. Look at that. Buy NatGas. No. Turn it into a currency trade. How about this? If you're listening, but you don't know, type in a question mark. Okay. So you want to look at EU. Okay. X minus M. Boy, I didn't even write it. Okay. Okay, the value of the euro, okay, is a function of X minus M. Okay. Is Europe importing or exporting natural gas? Nat gas, money. Okay, they're importing. So imports are up. They're importing natural gas, but they're exporting euro. So euro, boy, this mouse is crazy. Euro market. Think of the interbanking system as a market for money. Okay? Okay? So you have demand. We'll fix that this way. And then you have the supply of euro. Okay? So we're looking at the quantity of euro in the market. So we were at Q1, quantity 1, and the supply of euro, more euro than normal in the market. So you get supply 2. So you get quantity 2. Okay? And by the way, you draw a second one and then you do the value. But nonetheless, you can just do value or price, but we'll say value of euro went from the original valuation to where we are now, value 2. And the value of the euro, because of the quantity increase, the value has fallen. So if Europe continues to buy natural gas from anybody it possibly can, that process in of itself devalues the currency. Cool. By the way, look at oil falling again. Okay, we were just at 100. Now we're at 98. That's equivalent to a 200 pip drop on euro dollar. This is why I'm teaching the oil trading course right now, because in 1 hour, oil has moved the equivalent of probably 2 days on euro dollar. Richard says, is that positive for euro? I just drew it out showing that the price fell. So the value of the euro is falling, which is inflationary. Oh, you mean them going to Africa? Europe was supposed to do a deal with Africa 30 years ago to secure energy. And they eventually rejected the idea of building pipelines north-south, basically south-north. Okay? They rejected that because it would not have been fair to the Africans. It's really something. The mindset's really something. So instead, they built pipelines east-west with the Russians. Now, maybe back then they were thinking, well, the Soviet Union has collapsed. Russia is going to be part of the European Union and everything's going to be great. And, you know, they're going to be our friends and everything's going to work out. And they said, you know what? Our choice is north-south with Africa or east-west with Russia. And they're like, you know what? We'll go with Russia. Maybe that made sense at the time. Well, now there's consequences. Okay, so in 2 days we're doing the oil, no, yet tomorrow. Tomorrow we're doing the oil trading course, and I'm going to cover 150 years of the oil industry just to get everyone up to speed of what has happened and where we are and how we got here, and the importance of political events in the history of oil. So maybe you can understand the context of what's happening right now. I don't think you could if you didn't understand what's happened multiple times in the past. So that's going to be pretty cool and exciting. More than 150 years of history. We're going to start all the way back with the Drake oil field. I should Google that. Drake oil well. There's a museum in Pennsylvania. That's cool. I should go there. Oh, look at that. They got pictures. I love it. Hang on. Here it is. Look at all these cool pictures. The first oil well. 1859, Bubba. Look at that, huh? Cool. So we're going to start here. Look, it's a place. Like, we can go there. Boy, that's cool. Anyways, we're going to start there and go to today. Okay. Thiagos' first lecture was amazing. Thank you. General overview, of course, but I want you to know the basics so that we can get into the weeds. The course is still half price, everybody. FX Bootcamp, learn how to trade oil. Okay, still half price. It's only $250, bro. And we only did this one here. So I'll pop this in. Feel free to join us. Cool. Yeah, so anyways, oil moving down again. Nat gas in a down zone, but also the bottom is a buy zone. The current price is a down zone. Bitcoin farting around here, but I'm worried about it. Okay. Dollar, what's it going to do today? We're at key prices, key turning point. Yeah, key turning point for sure. And let's do this. Let's do the stock market. La 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 la. Meow. Okay, here we go. Okay. Started with a little bit of risk on. Hit my line in the sand. Sorry. It's actually 2 lines in the sand to emphasize the importance of that price. And kicked it off. Sorry about that. Sorry. So initial move risk on, which is dollar weakness. But if this holds below that line, don't be shocked if we get some dollar strength back. Go further out. Okay, and that's where we are. Okay, so wowzer. Because if that goes down, then that confirms the lower high there, which would then assume a lower low at some point. Maybe we fart around this 36, 37 area instead of, 38 to 40. So anyways. So what happens today is going to be directly related to what the dollar does. It's going to be interesting. So that's great. So thank you for being a subscriber. Would you please click the thumbs up button on your way out? Okay. And if you're in my day trading group, I will see you tonight. Set up trades for tomorrow. Also, we got that Kiwi news, but we'll meet before the Kiwi news, of course. And thanks for being here every day. Let me know how I can help, and I will do my best to serve. I consider myself a servant on these streams, so let me know how I could help. Have a wonderful day, everybody. Thank you for being in my life. You're good people. Cheers.